Bitcoin below 30,000. Is the crypto crash the financial system? Bitcoin fell briefly below 3,100 for the first time in 10 months on Tuesday. According to data site CoinMarketCap, while cryptocurrencies overall have lost nearly 500 billion in market value in the past months as investors fret about certain monetary policy. Compared with the Federal Reserve last cycle, which began in 2016, crypto is much bigger market, raising concerns about its incorrectly with the rest of financial system. In November, the most popular cryptocurrency Bitcoin hit an all-time high of more 68,000, pushing the value of crypto market and 3 trillion according to CoinGecko. That figure was 1 trillion on Tuesday. Bitcoin accounts for nearly 6 billion of the value, followed the Ethereum a 285 billion market cap. Also, cryptocurrency have a nothing explain growth. The market is still relatively small. In the US, a quality market, for example, are worth 20 trillion. While the Security Industry and Financial Market Association has paged or outstanding value of US fixed income market a 52 trillion as of the end 2021. Cryptocurrencies start out retail but industrial interest from exchanges, campaigns, banks, hedge funds and mutual funds in growth fast. While data on the proportion of retail versus investor in the crypto market is hard to come by, Coinbase, the world's largest cryptocurrency exchange, said industrial and retail investors each accounted for about 30% of the assets of the platform in the fourth quarter. Its industrial clients traded 114 trillion in crypto in 2021, up to just 120 billion in 2020, Coinbase said. Most of the Bitcoin and Ethereum in circulation is held by a select few. An October report of the National Bureau of Economic Research found that 10,000 Bitcoin investors, both individuals and attorneys, control about 1/3 of the Bitcoin market, and 1,000 investors own approximately 3 billion Bitcoin tokens. Approximately 15% of Americans were invested in digital assets of the 2021, according to University of Chicago research. While the overall crypto market is relatively small, the U.S. Federal Reserve, Treasury Department, and International Financial Stability Board have fledged stablecoins, digital tokens pegged to the value of traditional assets, as a potential threat to financial stability. Stablecoins are mostly used to facilitate trading in other digital assets. They are backed by assets they can lose value or become illiquid in time of market stress, while the rules is disclosed sarding source asset and investor redemption right and markedly. That could make stablecoin susceptible to a loss on investor confidence, particularly of time of market stress, regulation of said. That happened on Monday when Terra USD, a major stablecoin, broke its 1-to-1 page to dollar as well as low as 0.67, according to CoinGecko. That move partly conveyed to Bitcoin's fall. Also, Terra USD maintains its tie to the dollar through an algorithm investor runs on stablecoin. They maintain reserve in assets like cash or commercial paper could spill over into the traditional financial system, causing stress and those underlying asset classes, regulation warn. With more campaigns, fortune is tied to the performance of crypto assets and traditional financial institutions, dabbling more asset class other risks, and emerging state regulation. In March, for example, the acting controller for currency warned the bank could trip up crypto derivatives and unhinged crypto explorers, given they're working with a little historical price data. Still, a regulation overall and divided on the size of three, and crypto crash poses to the financial system and broader economy. Google will pay more than 300 publishers in the European Union for their news. The company has said following the adoption of landmark UA copyright rules published 3 years ago. The tech gigant has signed deals with publishers in Germany, France, Hungary, Australia, Netherlands, and Ireland, with many more discussions ongoing. A company employee said a blog post. Written by Sunana Kolal, director for news and publishing partnership at Google, the post states, "So far, we have achievements which cover more than 300 national, local, and specialist news publications in Germany, France, Austria, and Netherlands, and Ireland, with many more discussions ongoing. We are now announcing the launch of the new tool to make offers and 1,000 more new publishers, starting in Germany and Hungary, and rolling out to the EU countries over coming months," the post continued. She did not specify how much publishers were being paid. Two-thirds and campaigns signed up to cure their Germany publishers, including Der Spiegel, Die Zeit, and Frankfurter Allgemeine Zeitung. The announcement comes following a long battle by news publishers to get tech giants like Google, Facebook, and others to pay using their work. The European Union passed the European Copyright Directive in 2019, with member states now in process by adopting it as a national law. It allows third-party online platforms like Google to negotiate directly with correct providers. The issue has caused clashes between European news publishers and tech giants, with Google News closing in Spain in 2014, following legislation forcing in the pay collective licensing fee to republish headline or news snippet. Spain has already adopted the copyright directive, which requires platforms such as Google and Facebook to share revenue with publishers, while also allowing they reach individual or group agreements with publishers. In 2022, France fined Google 500 million over a dispute with the country news publisher.